And the thing to note is freedom doesn't come from having money, right? That's passive. Freedom comes from controlling what we have, right? So that's an active approach to this. So as we talk about this whole financial game, we're not even talking about investing, right? We're just talking about the basics of what do you do with your money.
Control.
Right? Is you control it. You are the number one asset. Where are you putting your money? What is your bank? Who is the banker in your life? And who are you as the borrower?
We used to think that the goal was just to get out of debt until we realized that we were playing the wrong role. See, the truth is, the role you play truly matters in this financial system.
Yes, so today we are going to break down the 4 roles of wealth, because usually we're just stuck playing one role. Like Darius said, like just get out of debt. Right. But that's not how people with money play this. So by the end of this video, we are actually going to walk you through each one of the roles so that you can take more control of your financial future.
Right, so when we talk about your financial system, think about it as a game, and every game has its characters. There's you, the bank, the banker, and the borrower. So when we think about ourselves, role number 1, ourselves, what we tend to do is we tend to put all of our attention on our job and our business. And
our income.
We focus on our income and what's in our bank account. But what we tend to not take as seriously is ourselves. We put all of our energy and all of our stress and thinking and hard work and positivity into all these other things, when what truly matters is ourselves, because without us, our job, our business, our bank account won't exist. So why are we not insuring ourselves?
Stop undervaluing ourselves. Not even when we get to the point of insurance, which we will address. But the point is as you are waking up every single day and going to a job, are you actually getting your worth? And if you're not getting your worth, what are you doing about it?
Right.
So that's point number 1 that I would like to stress as far as this role is concerned with the money game. Darius already laid out the players. He told you what they were. So as we think about us being the number 1 asset, what are we doing to ensure that we are getting our maximum value?
Right, because here's the numbers. Let's say you make $100,000 a year, and over 20 years, your worth is $2 million. How much of that $2 million do you have?
Wait for it. Answer the question. How much of it do you have? Is it in life insurance? Do you have it in investments? How much of that is liquid, like easily accessible?
Is your business worth that? Is your bank account have that? Bank account, savings account have that?
And if you don't have those, then we're just a little short. Just a little short.
Right.
So this is how we move forward, right? So let's think about the personal insight as far as all this is concerned. Like, because Darius said, nothing happens without us. Systems, everything that we build. So we have to treat ourselves like an asset. We have to move differently, and we have to spend differently and plan differently. So let's go ahead and jump into the second role, right? Because the first role is you.
Role number 2 is the bank.
So let's really understand the purpose of the bank. And the bank is an institution that holds our money, right? That's just exactly what it is. And traditionally, it's where everyone goes to access their wealth. And it's also a place where all of our money can disappear in fees and interest, right? So let's just keep it what it is. Because what we want to do is understand why we keep giving banks our money as opposed to becoming our own bank or finding other solutions. Because there are other financial products out there that you can utilize as alternative savings, right? In order for you to do the same thing and maybe get a little bit further ahead. So role number 2, the bank. Let's figure out how you can create a bank or a banking system in your world. And the way in which we can do that is what we talk about on the Wealth Nation channel all the time, using a properly structured whole life insurance policy as your alternative saving solution, because we're going to use it for 2 things. First is the death benefit capabilities that a life insurance policy can provide. Savings account can't provide us death benefit, right? High interest savings account can't provide us death benefit, but a whole life insurance policy can, and we can have liquidity the same as we would with savings accounts, for example. And we earn guaranteed interest and it pays dividends. So bonus.
Right. So up to this point, we have us and we have the bank. Now there's role number 3, which is the banker. The banker is the decision maker and they control the flow of money.
I just visualize somebody stamping like approved. That's the banker.
Or denied.
Yeah, exactly.
Depending on what your credit score is.
Yeah.
So most people,
when you don't control the system.
Right. Now, here's the thing. When it comes to the banker, most people are stuck as the borrower, meaning that they don't have a seat at the table. They're subject to whatever the banker says, as far as like if they're able to get money or if they're not able to get money. So as the banker, you decide how much money you lend yourself, because what does the banker do? They lend money to you. But if you were to take on this role, you decide how much money you can lend to yourself. Mm-hmm. So when you decide how much money you lend to yourself, you decide when you repay those funds, and you decide how much money you use. So here's an example of how Carmen and I did it. Let's say, or this is what we did. We borrowed money from our bank and we lent it to ourselves to buy a car. Now, there's nothing different from any other bank transaction. Banks lend money for cars all the time. Now, the difference is, it goes back to those 2 points. We were able to decide when we repay, and we were able to decide how much. Now, the responsibility for us was the fact that we actually had to pay that money back to our financial system so that we had that money again to reuse it. Mm-hmm. That's the biggest opportunity there, is taking on the responsibility of that action. Because if the banker was to do it on the behalf of the bank, all that interest goes to the bank, versus us making that decision and that interest going to our financial system.
Mm-hmm. Exactly. So now we have rule number 4, which is the borrower. So meaning us in this case. So like Darius was alluding to the point that we used the cash from our whole life insurance policy to purchase a car. We've done many other things with the cash value because we were acting as the borrower, right? So in this instance, many people see borrowing as like a weakness. But in our situation, we actually see it as a strength because we own the system that we are borrowing from. And we're leveraging the system to allow us to get ahead. So we'll talk a little bit more in depth as far as that is concerned. So if we compare like traditional borrowing compared to what we're doing with our whole life insurance policies, you'll see how it makes more sense. So when you own a whole life insurance policy, you have the ability to access the liquidity. You can do it in 2 ways. The very first way is called a withdrawal, where you actually like go to the ATM machine and you take the money out, so to speak. I'm just using the visual. You take the money out of your policy, right? That's called a withdrawal. We don't ever do withdrawals because when you withdraw money out of your cash, 1, you're going to be taxed, and then 2, it's actually going to affect the growth or the compounding that you have going in your policy. And it's the same way in which you would do a savings account, right? If you withdraw from your savings account, you're going to affect the growth because now the compounding has to start all over. The second way in which we access the money from our policy is we get a loan from the life insurance company. So as the borrower, we literally put our policy up as collateral. And if we have $30,000 of cash available in our policy, we say, hey, life insurance company, I'd like to get a loan from you for $30,000 because you can see right here, I got it. And so what that allows me to do is to use OPM, other people's money, meaning the life insurance company's money, and my money is put up as collateral, but it doesn't affect the growth. So my money continues to grow while I am getting a loan from the life insurance company. Right. Now, the best part about the life insurance company now being the banker in this transaction is they're going to deploy the funds because they have the collateral. And guess what? We get to determine the payment terms, the repayment terms, excuse me. So we can decide if we're going to pay it monthly, if we're going to pay it quarterly, how much we're going to pay. We get to control that entire process. They are going to charge us an annual fee because they did allow us to borrow their money, right? As they should. So that's how this whole process works. So borrowing isn't bad. It's just who you borrow from changes the entire game. Right. So you can see, I still got my loan. We still use the loan to buy the car, for example, or to have other means of financing. And we acted as the borrower in the situation, which isn't any different than what we would do if we went to the bank. Right.
Now, here's how we got to this understanding in doing all this, because the thing that I want you to understand is the fact that it is the exact same. The only difference is the roles that we're playing and the responsibility that we're taking on as these roles. So as a traditional banking, like Carmen says, we're going to be subject to the interest that they present to us. So if it's a car, we're going to be paying whatever the interest is for the car. If it's a house, the collateral is going to be the house. If it is credit cards, there is no collateral, so we have 25% interest. When you borrow from the insurance company, the collateral is the insurance policy, your insurance policy. Therefore, the interest is going to be the same regardless what you borrow for. That's the opportunity we have. And the way we leverage that, first and foremost, is we had a lot of credit card debt. With credit card debt, there is no collateral, so you have high interest rates. You have the 25% interest. So what we did is we borrowed from the insurance company their funds, and we bought back all of our debt from the bank. So now the debt is paid off to the bank, but we continue paying those minimum payments back to our financial system, which means that the interest that we were paying to the credit card company, it goes back into our system versus going back to the bank. Now, with that understanding, because we had to be disciplined, we started to learn other things, which is how we had the cash because of the interest to buy a new car, a brand new car. So when we went to the finance department with the car, we asked, how much would it cost, or what interest would you charge me if I was to use your financing? They gave us an interest rate. We just paid that interest rate back to our financial system because we had the cash, so that we can have more funds available to buy a new car after the term that we created was up. The opportunity there is the fact that when you get a loan from the bank for a car, remember, cars are a depreciating asset. So it's a liability because it's taking money out of our pocket. What the banks do when they lend you money for a car, it's an asset to them because you're paying interest on that loan while you hold the liability. When we were able to take on that role, we were able to make our liability an asset because it was putting money in our pocket. And the most important thing to understand is the role that we decided to take responsibility for in those situations or in our own lives for our financial system. So you have to make a decision. Mm-hmm. What are you going to do moving forward? What type of mindset
do you want to play?
What roles do you want to play? What roles do you want to take responsibility for? Because as long as we continue to not take responsibility and to contract that work out to somebody else, that's money that's coming out of our financial system to make another company or another business or another person more wealthy than us because they have a better plan for our money than we do. When we take on that responsibility and take on those roles, we're able to have a plan for our own money. Therefore, in the example I gave earlier with the $100,000 salary over 20 years, the $2 million, you have more of that because you are using your own financial system. Mm-hmm. And the longer you use your financial system, the more money you have. The longer you have your life insurance policy and you're using your life insurance policy, the more money you have in your financial system.
And the thing to note is freedom doesn't come from having money, right? That's passive. Mm-hmm. Freedom comes from controlling what we have, right? So that's an active approach to this. So as we talk about this whole financial game, we're not even talking about investing, right? We're just talking about the basics of what do you do with your money.
Control.
Right? Is you control it. You are the number one asset. Where are you putting your money? What is your bank? Who is the banker in your life? And who are you as the borrower, mm-hmm. right? Do you have more control in being able to be the borrower if you just change a few things, change some products and ways in which you actually do your banking needs? Because guess what? We just talked about debt and buying a car. We have also leveraged our cash value life insurance policies for investing in real estate, for buying homes, for flipping homes, for doing seller financing, right? There's so many ways in which you need financing in your lives, and it's not only just about debt. Right? So we're at a point now where we're able to use our policies for cash flow purposes because we are controlling more and more of the opportunities in our lives to control our money.
Right.
which is the name of the game.
Right. Now, Carmen and I, we have 10 years of experience using our own financial system. Now, the thing that you have to understand is that when you jump into this, you're not going to be able to have the experience that Carmen and I are having right now because we've been doing this for 10 years. You have to put in your work and come to your own understanding. So the most important thing for us and the most important thing for you is to get started. Now, if you are at a point where you have significant amount of debt and you think that you're just gonna buy a life insurance policy and your all your problems are gonna go away, no, it's about control and it's about having a system. The system that you're currently playing in isn't working. So what you have to do is you have to think about your cash flow, you have to think about the roles, you have to think about your responsibility, and then you jump into it once you've educated yourself. So the only thing we're doing is presenting into this video is a mindset shift. And where are you standing?
Mm-hmm.
Are you standing on traditional banking, which is something that you were conditioned to do since birth because Wells Fargo was there for the past 100 years? Or do you want to do something different, create a different system for yourself and for your family to move forward and be able to realize all the hard work that you put into going to work or putting into your business or putting into building your bank account? What role do you want to play and where do you want to stand? So the thing is, this isn't just theory. This is how families get wealthy, by keeping it in the family. This is how you keep money in your family.
Now, if you're ready to jump into the 4 roles in which we discussed today, then check out our next video, how to become your own banker. And don't forget to own your own lifestyle.
Or someone else will.